Good afternoon, everyone, and happy Friday, and welcome to December 12th, 2025 edition of Trading Trends ETF style. What a day and week it's been. Let's get right into it. A lot happened today with a little bit of a tech crash. Let me pull up the doc here. We had said you're going to have some euphoria going into the Fed, and then we'll look at the charts to see exactly how that was captured. Broadcom kind of spoiled the party last night, and the Oracle data center, excuse me, getting delayed. But let's wrap up the day first, and then the week, and then the year. Some things may be surprising to you, especially in terms of the recap of the week. Today, semis and tech and bonds sink. Rates soared today, so much there for your rate cut. But the long bonds got absolutely smoked, as did semis and tech, like I said, driven by Broadcom and Oracle. New all-time highs for silver, financials, small caps, the gold miners, EFA. So it's Europe, Eurozone, RSP equal weight stock, all-time high today. So that is obviously bullish. Silver miners, and this was really a big trade of the whole. We'll take a look at the silver miners. It's a big trade, nothing new there. XLI, the industrials, new all-time highs. That's your Caterpillars and such. And then the Dow DIA itself, closing in on 50,000 for that index, and Canada all-time highs. When you look at the week, NASDAQ obviously had a very ugly day today, down 2%. When you look at the week and you step back and you look at absolute terms, this week was characterized by a massive, we'll take a look at the nat gas chart. Boy, that thing is not done getting to Chembade from the 200-day moving average, because this thing got sent all the way, a 22% loss on the week for nat gas, almost 4% a day each day, and a 5% gain for silver. They continue to rush into this trade on the week. Silver, a nice week, up almost about 1% a day. It was all the same trade. Gold miners, gold itself, silver miners, they all had a spectacular week. Let us get first into the Vesper panel here, and we'll see what really made markets. I hope you guys have a splendid, wonderful weekend. Treat others as you'd want to be treated. Always. Go. Let me max screen. You should see that now. Okay, so we'll get to the index in a second. Qs down 1.9, an ugly day. Of course, when you look at the tech and semis crash, you're going to get the worst part in Qs. Tesla bucked the trend, one of the very few green spots, up 2.5%. Nvidia down 3 to 175. Broadcom, that was the heart of the storm today, down 11.5%. Weird earnings last night when they reported. It went to all-time highs. I believe the stock got as high as 430, something like that. And then they started talking about potentially not getting the ROI, essentially, that folks want in due time. And they just continued to crater the stock, closed very near the lows towards the end of the day, could not find a bid at all. Small caps down 1.5% after striking an all-time high and a bit of a reversal from the morning. Oracle down 4.5% on those data centers being delayed. Google down 1%. Palantir down 2%. Meta down 1.3%. Microsoft down 1%. Still, of course, a Microsoft OpenAI trade due to their ownership. So that's how people are trading that one. AMD down nearly 5%. Amazon down almost 2%. Micron down 7%. That was not a fun day for me with that. And we'll look in a second. Volume today was very robust as well. We had 100 million shares in SPY. It was very, very active. First off, so here's the intraday tape. They want to sell it right from the get-go. We've been seeing this kind of morning dump. Typically, people blame it on Jane Street, European sellers, et cetera, et cetera. But typically you wake up and it gets pretty ugly till about almost lunchtime here in the East Coast. So right here, 9:30, we opened it at about 688. That is, if you remember, right at, it's about $1.50 below the all-time highs. And boy, did they whoosh this thing all the way down at 11:30 a.m., all the way down to 679, which is under the 21-day exponential moving average. So really, you had the whole thing, tech being up 12, 13 days in a row. And today, a give back of that. We'll take a look in a bit. And if you hear oversold today, really no bidders truly until we got above VWAP at 12:30 p.m. That was the first sign of strength. It looked like it was going to fade, though. That was 683. They got above it for just a second. The highest RSI we got was 42. Let me know that just not a lot of conviction in terms of going the long side. In terms of the S&P, and as you see here, a nice little candle there at 3:30 p.m. and then finally still tried to get a little bit of a rally, some buys here at the close at 3:30, but still just under VWAP. VWAP was 682 half essentially, and we closed 682 quarter. as I zoom out, so we've been talking about this since the Monday before Thanksgiving about, bullish accumulation phase and when it ends. And I had it on or around Wednesday-ish. So again, today we got it struck. They did on a pre-market type thing at 690. So I said this before too, about 2 weeks ago. It's going to look like a double top, but this isn't about being right. It's about making money and trading, exactly riding the market where it is. So it's a good and a bad thing. Oh man, I'm probably going to go on a tangent here. IWM went outside the top Bollinger Band, very bullish. But the tech trade totally looks tired. That looks like it topped out in October, a la kind of like a Bitcoin, just reduced, curbed enthusiasm from there. Yes, we got above it, and this is what I said was going to happen before, and this is what I believe. I had a 696 target. I just did a lot of, different kind of cycle work and math, but now we're getting a little bit long in the tooth. Obviously, as I always say, I want to see how crypto and risk trades into the weekend. There's an ugly bearish engulfing, that took over the past several days. Like we did not a lot here. It was just a slow stair step from November 28th. It did a lot of work here. And again, this rally began around 658. And like I said, a bell essentially was wrong, it seems, at 690. What happens Monday and earlier next week? It's a big week next week as well. There's several catalysts. Options expiration, VIC. There's a lot of things going on into Friday, and then of course it'll get probably a little bit quieter into the Christmas period. But to be very honest with you, SPY still above 50 RSI. You're seeing all-time highs in RSP and IWM today. I was also looking closely for the VIX, VXX, new all-time lows today. I know it reversed, and I told you guys once you see that 29 handle, lets me know the move is almost done. It actually got to 28 something. We'll take a look at the chart, and then it rallied. But not as much fear-based as I thought. This was froth coming off of some of the big risers in semis, which is one of the top 5 trades of the year. Still, believe it or not, up 50% year to date. So not quite silver, but there is alpha there. And it is some of the select ones like Broadcom, Micron, etc. But you saw some of that get shed today. So in terms of Monday, Tuesday, I don't want to you can never get married to a target. I did have 696, basically going off the back of small caps, but I think they're really they leaped into that trade, sniffing out the rate cut, and I think small caps might continue. SPY here looks like it's getting. I don't want to say sell a lot of stuff here. Like I said before, my strategy was to sell into the Fed and after the Fed, and that's what I've been doing. Get rid of longs. I think the next 2 weeks. So let me zoom out. I'm not going to pick the exact date at the top or the bottom, but for the next 2 weeks ish, going right about into that Santa Claus rally, I expect him to show. Then again, everyone does, and sometimes that's when it doesn't happen. But I do expect Santa to show like he usually does on that Christmas Eve, and then we get that nice rally into year end. But for right here, the next 2 weeks, right around the 25th, 24th, right around there, I see us going a little bit sideways. Right around here, to be honest with you, I have my level at 679, which is 0.5% from here. And if things get really ugly, they could test this level again. I'm not so sure about that. I don't see these signals for that to send us back to 653 and see, hey, can the bulls have this, type of Wolverine last stand one more time? I don't think so. But sometimes if you see double tops, they want to send it back to the prior level. Then we'd be range bound between that 653 and 690 area. That's not my base case. But what I do think is this is going to have to correct through time instead of price. And people are going to calm their skis. You're going to have a lot of talk about potential double tops over the weekend, over the next 2 weeks. But I think we're going to hang in right around here around 6,800 in the S&P. And longer term, as I said, year end, still my target is 700 on SPY. So just that right there, we'll get into the hood of a lot of ETFs that moved massively today. But that in and of itself will be frustrating because you're going to have to allocate appropriately. A lot of the indices are a little bit overdone here due to this very strong 3-week move that we've had. Okay, this is where the rally began, from 655 all the way to 690, and that's pretty much what we had expected. All right. Let us see. So this should be easy. The gainers today, nothing. There was no gainers to the upside in a multiple sigma move. They did not buy anything. Yes, there was cannabis up 50%. I think that's at 52-week highs now. And that is just like that now, one of the top trades of the year. Of course, it's a very, very small trade on news that Trump is going to declassify it as a drug on Monday. So that was a big surge today. But let's get into, so that's the S&P one-year view. So they didn't buy anything besides that. Losers, we're going to go into the heart of the storm. and there was the semiconductors, SMH down 4.5% today. We've been talking about how this has been on just an absolute stellar run since the 21st, since you saw that candle right there at 325. And then boom, we got all the way to essentially 375, and then a big give back today of 4.5%. SMH, again, all-time highs 2 days ago, but barely. And you're going to see that corresponding in the market, almost looking like a similar double top. And that was my first tell that we are not going to rip through 7K, 705, and all that, super animal spirits. The run for me, it's by head run from 655 to 690, take a pause, so on. So SMH for me, my target was if you want to get Q, it was around 377. We got to 375 half. And again, like I said, it just came a little bit short. I don't want to be in this area, so I will be letting go of some longs here in the coming days, very short, probably Monday, Tuesday. But I think this looks like the SMH is headed. Again, this is going to be annoying, frustrating. This is under 50 RSI. It's at 50 essentially, but it fell very quickly here in just 2 days. Mainly today, down 4.5%. If they really sell this thing ugly, like I said, this is almost looking at the same SPY chart where Q's, a lot of correlation, concentration, right? So they could send it to 325. That's not my base case. I think it hangs around here. My level, honestly, is 355. So it probably backs and fills after a big candle like this, and then it goes like that. Be careful of the OpenAI news, but I think this is range bound for a little bit with slightly downside bias. I don't think they're going to pour into the semis right now. Zooming out, there's going to be very similar chart. XLK, this is tech as we zoom out. Down 2.9 today, XLK. So the semiconductors in the heart of the storm. Thank you, Broadcom. Down 4.5%. And then then the tech basket down 2.9. Very similar, but understand that the all-time highs for tech was still back on October 29th. And that's what we're saying, that the whole AI trade looks a little bit tired. They're really just overdosing essentially on silver and the metals trade. We'll take a look at those charts. But yeah, this is XLK. Yeah, they just split last week at 2-for-1. And again, so this peaked Halloween week here at 153. Here we are at 144. I don't exactly think the sky is falling. I don't want to be in tech, though, for the next 2 weeks. Pharmaceuticals, healthcare look like they might catch a safe defensive bid for the next 2 weeks. Honestly, I don't see a ton else that looks amazing. I don't think emerging markets looks great right now, so we'll see. But tech does not look great. I have a floor on this of about 136 that they want to sell out there. I'm not so sure because I see the all-time lows being printed in VXX. I just don't think they absolutely abandoned beta. So frustrating trade. I think tech is sideways, similar with the market due to the aggressive sell-off today where it did several candles in one go. So again, this candle today sent us all the way back to December 1st. So 11 days of trading, essentially, 11 days of gains given back in one day. It's the whole thing about stairs up and then elevator down. So that's exactly what we had here. Just doesn't look super strong. Like I said, I think it hangs in right around 145 for the next 2-ish weeks. Nothing exciting. And then let's look at bonds. So I'll tell you when we see setups. You probably don't love the idea of selling upside calls, an all-time high market in terms of, spec, but you could probably sell the 150 calls in XLK, see what they pay you, going 2 weeks out, because I don't think that is going to be taken out anytime soon. All right, or anytime soon as in the next, week and a half. Bonds, so this is interesting. Right to the 200-day moving averages is VCLT. This is the long-term bond. It moved even more than the TLT today, down 1%, and that's a lot. I think this will base right here. I think this is a good support, the 200 moving average. It's been curling up since early September, and it peaked here on October 28th, similar with the broader market like we just saw with XLK at 79.28, and now it's slipped all the way to essentially 76 or 75.75, which is where the 200-day moving average and support is. Surprising how aggressive the sell-off was here, but I do think it's going to base next week right around the 75 half to 76 handle. I actually like accumulating a position this under 77 with a target of 78 in the next 2 to 3 weeks. So I do think bonds will go higher, rates will go lower, and essentially probably put a lid on the markets overall. Maybe a small upside just because of the aggressive sell-off today. So if it sounds murky and everything here, it's because it is. It's because you had all-time highs and you had a reversal in select areas of the market, but a lot of it was from the froth. Let us go. If you have questions, a ticker, put it in there. We'll take a look because things are moving. Top 3 gainers of the past 5 days. The number 1 gainer on this whole week, silver miners. And I don't want to make this the metals segment because it's all the same trade this week. And so this was up 7.5%. Today was down 1.8 to an all-time high though. And a little bit of a bearish divergence. We got 67 RSI here. So lets me know that we could have a bit of a fall. But this was the number 1 trade this week. New all-time highs, up 7.5%. I don't want to chase this here. I've been saying, look at your gold and metals exposure. I know it's ripping, but I just don't love chasing it up here. I like the breakout, obviously above 27 even, going above that mid-October high. But right here, I don't want to chase this above, 27, honestly. So I'd rather stay out of this for about 2-ish weeks. And if you get entry at about 25 even, which, yes, I know is about 10% away from here, I think that would be a stellar entry for what has been one of the absolute fire trades of the year. This has been having a big 3 days in a row of big gains. Like I said, up about 8% on the week. I don't want to chase this up here, though. Down today, 2%. Let's see if it's the sign of the next thing to come. I think it's going to be not so great 2 weeks for this the metals trade, especially based on how extended it's gotten just in the short term, and then you're going to want to enter. Number 2 best trade is the airlines. This really did well. Some of the individual airlines are hitting all-time highs. Jets, new 52-week high today, overbought. This one hasn't been this excited and bulled up since early mid-July. Things look very good. The 200 days is just starting to curl up. Great support down there at 23.65. Here we are at 28.25. The chart here, we've been talking about Jets as well. This looks absolutely great. Don't want to chase this here. Again, the market's everything I'm seeing here is a little bit extended, and this is what I'm saying. 2 weeks ago, when we were getting aggressively sold off, we were going to say you're going to put a little button on this right around this week. And human hubris to think that this is the top in human history of stocks. I'm not saying that at all, but for the next 2-ish weeks, I do think you're going to want to step out. I don't think everything's going to be up and to the right. Jets is no different for me. I have a full target for this at about 27.75 today. It was up 10 bips. It's had a stellar week, up about 3.5% this week, which is really strong considering, Q's lost quite a bit. SPY down about 50 bips, I believe, on the week. But I think this will pull back over the next 2 weeks to about 26.5, and that'll be your entry. So basically right there, the area of the former breakout above those basically Labor Day week highs. And this has been more, look at this, since the 21st, this has been straight up. What a great buy after that coil just being range bound between 26.5 and 23.5, and then boom, like that, all the way to 28. So I would sit this one out as well. You could, to me, almost can sell. I'm going to take a close look on Monday about selling upside calls, maybe on some extra extended things, because the market to me looks like it's put in the top for right now. That's what the charts look like to me. And yes, next one, regional banks. How bad can the market be? And overall, if the regional banks were one of the best trades, the number 3 best trade this week was the KRE, the area that we usually get, fearful and all that, was the regional banks. I think this put in its high yesterday, hit 68, and that's pretty much, to me, even a little bit overextended. I have full value about 66.5. But I think this, I don't want to say rolls over, but I think this digests its gains to about $64 over the next 2 weeks. Might take a little bit more time because it is overbought, and we haven't seen this kind of bullishness since early July when it had this type of reading. So could take a little bit longer, but I think overall, like by the Christmas Eve, I do think you're looking at around a 64 even handle, and then you will want to participate and get in there. This is still essentially almost, I don't want to say dead money, but the 200-day is so flat at 60, and then you just had your all-time highs at 68. So there's probably better places to be, but definitely not a bad trade. Don't forget, this one bottomed in April at $47, and here we are at 67. A massive move. Okay, top 3 losers of the past 5 days. Wow. I'm looking at you. Natural gas, a massive loser. The story of the week in terms of, smaller, commodities. But natural gas, look at this. Tell me technicals don't matter. This got above the 200-day moving average. I told you, suckers bought that gas on December 5th. We said, wait, you always want to, I know some people always want to have fast, finger triggered, but I want to see like several days of closes above a 200 moving average, and I want to see it start to stabilize. One day does a trend not make. So yes, nat gas bottomed in mid-October at 11.55, and my God, this thing has gone down 22%. Okay, in the past 5 days, or average about 4% a day. Today down 2.7. I think it's almost done. I think it's got like another through mid next week of just more downside, but I'm not calling for an absolute bottom. I think this goes not far low from here. To be honest, I had 13 even to about 1275 value, closer to 13 even, honestly. So I'm not calling for new lows, but you need to see these candles get a little bit less ugly. Okay. And this is, again, look at that RSI. It couldn't even hold. Right after that, you don't want to be above the 200 moving average. You got rejected, and then under 50 RSI. That just lets you know the tug of war, they're going to sink you. That's going to go the other way very quickly. So yeah, this probably, again, is also a frustrating trade. It probably bases, little zigs and zags, and then you may want to participate for a short-term tactical long for a rally to 14. But obviously an ugly trade, nat gas. We thought potentially, if this is held, of course, and then maybe above 1560, and then, hey, who knows, maybe this can get towards $20 and so on and so forth due to positioning, but not the case. You always got to be flexible and don't get married to your targets. But this week, down 22% nat gas, hands down the biggest mover lower. If you're long nat gas this week, they made you pay for it if you bought 7 days ago. This was last Friday. All right, number 2 biggest loser, similar energy complex, but nowhere near the losses, was oil, down 4.5%. Similar technical weakness, gets to 200-day moving average, and this has been the trend since October 1st. Gets to 200-day, rejected, 200-day, rejected, and now you're almost starting to see lower lows here with a floor at 68-ish. Oh boy, oil down 60 bips today, down 4.5% on the week. I do not like this for the next 2 weeks. I know I'm coming out like super bearish, a lot of stuff here, but I do not see a lot of entertaining charts. To be frank, when I was looking today, the only thing I really saw was pharmaceuticals, healthcare. Looks like it can go, but that's about it. This looks like it wants to go lower to about 67 over the next 2 weeks. Do not like this chart right here. I think it gets very close to those October 20th lows at 67. Also coincides with essentially the June levels. And again, look at this RSI. It has not been above 55 RSI since September, which is when it was above its 200 moving average. Heavy resistance here at 72. This thing's going lower for the next 2 weeks. With, like I said, a target of 67, potentially sell upside calls on this, maybe like the 70s. I'd have to see what it would generate, but that's not a bad idea to do, like the December 26th sell the 70 calls. I'd have to say, or 71 calls. So oil, write that down there. Oil looks tired to me, and I think it's just getting to go lower. I'm going to write that down for a call of action on Monday. So that's USO. Yeah, I like selling the upside call, see what it generates. But oil looks like it's not hanging in. And then lastly, this is interesting. So the losers on the week were nat gas, not even close, oil, and then VXX was actually the 3rd biggest loser this week. So how bearish can you be? New all-time lows today in VXX, down 3.5. Look at this, 29.64. We had said, again, when the rally began, on the 24th, okay, when we had this little, almost similar to nat gas, like, meerkat to near-term resistance, got to 40, and I said, okay, that's cool. We are calling for about 30 handle. If you get to 29, that's going to let me know the up move is done. We got to 29.12. Apologies. The low today was 29.12, so that's very close to 28. And this looks like, to me, again, always difficult charting a 9-time series product like VXX. This looks like it may have. Today, it was up 15 bips. So think about that. NASDAQ was down 2%. You think you have massive hysteria, fear in the market, kind of a thing. But we have all-time highs in RSP, IWM, all-time lows in VXX. Excuse me. I think this bottoms very early, like Monday, Tuesday, right around 29 even. And then, like I said, a lot of bearish-looking charts, a lot of overextended charts over the next 10 days to 2 weeks. I think you're going to get a bounce in this to right about 32 to 32.5. And then that will signal Santa is coming. So if you want to go backwards and forwards. So this would, to me, it's just prognostication, but looking at targeting in terms of probabilities, this looks like it's going to get to 32, 32 half right around that Christmas Eve. And then that will let me know that Santa's getting ready to go down the chimney and leave him some cookies and milk and such. And again, this thing has absolutely fell out. There's a sea change here, November 24th. Once this happened, the market took a breath of fresh air, and there was almost tranquility. Honestly, I would say in the market. That's where you have the stair step lower, where VXX was 37 at that time, and now down to 30. So as I said, VXX, looking at you, this is headed to 32 over the next 2 weeks. All right, but the third worst trade this week. So nat gas, oil, and vol was where the pain was overall this week. All right, top 3 trades of the past 5 days. If you were short nat gas, long the silver miners, and short oil, you crushed this week, going on into all-time highs. No, I mentioned 2 of those were shorts. One was a metal long, and we had RSP all-time highs today. So definitely an interesting market, and that's why we do the show, to help us, look at our process here, and hopefully it sheds a little bit of light for you guys as well. Now, one of my favorite parts is the year in review, essentially the year over year, going back from last December 12th through today, the top 3 trades of the past 52 weeks. Let's see if they're set up. So the number 1 trade of 2025, essentially, going back from December 12th of last year, GDXJ up a robust, it's up number 2 on the second entry, up 136% are the gold miners. Gold is up here as well. Silver is up here with, over 75, 85% gains. Silver miners, it's all a very close trade. I went with the most alpha generated and the most liquidity, and that's GDXJ. New highs today. You have a bearish divergence. It's only got a 69 RSI. Don't forget, this thing went on an amazing run from the end of August all the way through mid-October. Just a ridiculous run to highlight, from 78 to 111, and here we are now at 114, down 50 bips today. A great trade. You have to allocate some to this. In terms of the chart, I'm not chasing this here. I have a very rough date on my pad here written down for November 19th to start to ascertain and see if that's a better area for entry. I'm targeting 104 for an entry. Yes, that is $10 off, or like 8%. Seems aggressive. Sometimes I could do it in 2-3 days, but then I will want to be in the story of 2025. Get long at that point. It might take a little bit longer. It might come into during the Santa rally, possibly like 27th or something. But this is the story of the year, up 136%. The gold miner juniors, I would buy at 104 with an exit target of 114, right where we are here. Hence why I am not chasing here. And you see a lot of charts. This is what you want to see. This is not a double top. This is 111, obviously, and here's one. It touched 118 today. A view up on the day was 114.90, and they didn't hold that either. So I think this will come your way in about 2-ish weeks, but an amazing looking chart. This thing has not even had anywhere near an issue, any kind of a dilemma, since the end of January, when it wasn't doing a ton, back when it was trading $48. So the gold miners, the trade of the year, I think you'll get your setup in about 2-ish weeks. All right, number 2, that we get away from the metals trade, because a lot of them are, of course, correlated, and they're dominating in 2025. It's gold, silver, etc. Number 2 is South Korea. It's almost up half as much as the gold miner juniors. It's up 67%, which is still insane for a geographical ETF. This did peak on November 3rd, okay, at 101. I am still long this synthetically through an ETF. It is at that critical 50 RSI mark right here. This is the number 2 story of the year. This just a beautiful stair step higher, and really when you got that breakout above the 200 moving average, started to go up, stopped going down, started stabilizing, go higher, and you had that overbought registration right here at $62 back in June. Off to the races. Things look wonderful for South Korea. That being said, sorry to tell you, the next 2 weeks do not look so great. You might have an up day Monday. Today was ugly, down 2.5%. Don't forget, this is 40% Samsung and Hynix, so they're also tech associated. When you see the Qs down 2%, this is going to get hurt. It's a different way to play the global tech trade. This does not look so great for the next 2 weeks. I think they sell this down to as low as 88, but I'm looking at $90. So I think this has another 2.5% possibly to go, and it might scare people. But overall, the trend will be intact. My floor would be 87 even, and I don't think it'll take out those mid-November lows. So overall, still a decent place. I'm almost seeing a pennant here, and then it will, in my opinion, resolve higher. After 2 weeks, if you get an entry around 93, I do think the target is 98, which would still be inside of those all-time highs on EWY. All right, that is the second story of the year. And the number 3 of 53% is uranium. So this is not an S&P year. It's not a Bitcoin year. I'm just looking at the levels. And this was totally a metals year. South Korea. Then we're looking at uranium and then select semiconductors. Semiconductors, actually, if we continue and we did the top 4, SMH is next. Even with today's bloodbath, SMH is number 4 gainer. So, of course, with the correlation in the S&P is why you don't want to throw the baby out with the bathwater. Uranium, an ugly day today, down 6%, and it's still your number 3 leader year over year is uranium. I do not have a position on this right now. I was looking at when, again, same as every chart I basically saw today, except pharma and healthcare. This looks like it's going lower for the next 2 weeks. It's kind of like a just sell and go away. I know it sounds crazy because it's not May and we're all-time highs, but these look extended, and this has been a 3-week run for many assets. Looking at uranium here with a beautiful hold that it had at 41.60, and then boom, they blasted it to 49.5. And now here we are. Yeah, this has, to me, 2 weeks in the penalty box, much like every equity we've reviewed here. And I think this is headed to, this is a volatile ETF, of course. I think this is headed to right around 43. This it's going to be a little bit, this will be messy, but I think $43. They could sell it as low as 41. But again, looking at upside calls, selling calls next week, I think maybe a flavor, doing a position sized controlled manner. But I do think the top is in for the next, like I said, on many assets for the next 2 weeks. This is basically what we're calling for. All right. So top 3 trades of the year, gold miner juniors, South Korea, and uranium have owned 2025. Owned it. Hopefully you did as well. Own your weekend. Peace. See you Monday.